Something big is going on this year in 2023, and people are looking to gold as a safe haven. Not just individuals and institutions, but also banks are buying up massive amounts of gold to protect themselves. Should you be looking to gold as well? Let's get into it. Thank you so much for watching my video. I do sincerely appreciate it. If you want to learn more about investing in precious metals, or if you just want to watch awesome videos about gold and silver, make sure to subscribe to my YouTube channel. First off, I want to let you know I have partnered with US Gold Mining Inc. to bring you this video. I partnered with them a few weeks back, so I want to give you an update on their company and talk about another catalyst for them, so stick around for that. But let's talk about what's going on with gold and demand for gold right now. It's absolutely incredible. So far in 2023, physical gold demand is up 5% in the first quarter. This is demand for gold bars, gold coins. If we look down here in this article, we can see investors bought 302 tons of gold bars and gold coins in Q1 with a value of 18.4 billion. This was 14% above the 5-year average, according to the World Gold Council. So obviously there's massive demand for physical gold right now. Also, gold ETFs are seeing record net inflows for the second straight month. So not only are people buying physical gold, they're also investing in gold ETFs. Central banks are buying up massive amounts of gold right now. In fact, last year was a record. They bought over 1,100 tons of gold, and in 2023, for the first quarter, they've set a record once again. So the question now becomes, why? Why are central banks buying up so much gold? Why are people buying up so much gold? If we dig into this article, we can read the 3 reasons why central banks are buying and holding gold right now. So the first reason is to balance their foreign exchange reserves. Central banks have long held gold as part of the reserves to manage risk from currency holdings and to promote stability during economic turmoil. That's the key word right there, economic turmoil. We certainly are seeing a lot of that right now. Another reason is hedging against fiat currencies. Gold offers a hedge against the eroding purchasing power of currencies, mainly the US dollar, due to inflation. So they're worried about inflation, and for that reason, they're buying physical gold. Lastly, to diversify their portfolios. Gold has an inverse correlation with the US dollar. When the dollar falls in value, gold prices tend to rise, protecting central banks from volatility. So once again, they're worried about the dollar losing value. And honestly, I buy gold for these reasons as well. When I think about storing my wealth in gold, I think about putting my wealth into a safe place. This is my insurance. It doesn't matter what happens to the dollar. It doesn't matter what happens to the economy. I know my wealth is going to be protected. There's no counterparty risk when it comes to buying physical gold. No company, no bank, no government can control my wealth because I can literally hold it in my hand. This is real money right here. Since the creation of the Fed 110 years ago, the value of the US dollar has gone down 97%. Why on earth would you want to store your wealth in something that is failing? That's why I prefer precious metals, gold and silver. In 1970, 1 ounce of gold cost around $35, and today 1 ounce of gold cost around $2,000. So as the value of the dollar continues to crumble, the value of an ounce of gold relative to dollars goes up, which is exactly why I think now is a great time to be putting your money in gold, because the dollar is clearly in trouble. Individuals see this, institutions see this, and central banks see this as well, which is why they are stockpiling and hoarding gold at a very rapid pace. I see gold as a win right now, which is why I'm buying more. The safest way to invest in gold is to buy the physical bullion. I prefer gold coins, but if you want to grow your wealth and invest in gold companies, you can look at gold miners. The one we're talking about today is US Gold Mining Inc. When I first started talking about this company a little over 2 weeks ago, their share price was just over $9 a share. Compare that to today, as I'm filming, it's $14.60 a share. So a big jump up in just a few weeks. However, if their share price keeps going up, it is possible they could meet the Russell criteria and be added into the Russell Index. We should know on Friday when they begin their reconstitution. So this would be insane for them if this does happen, and obviously could bring in a lot more buying, and this is a huge potential opportunity, but we're getting ahead of ourselves. Let's get to the fundamentals. US Gold Mining Inc. has a project up in Alaska called Whistler, and at this project they have 9.4 million ounces of gold equivalent in the ground, which is currently being valued at about $15 per ounce based on their market cap and cash holdings. However, the median valuation for a junior mining company is around $40 per ounce, so potentially they're super undervalued right there. But on top of that, there have been 3 other junior miners in their region which were recently bought out for over $100 valuation per ounce of gold in the ground. So again, it seems like they're super undervalued. Let's talk about the size of their project as well. 9.4 million ounces. A good size junior miner has about 1 million ounces, and 5 million is considered world class. So 9.4 million is actually a rarity. This is a massive amount of gold in the ground. And their CEO, Tim Smith, has a ton of experience. He actually worked for a similar junior mining company, which was bought out by the world's largest mining company. And their gold in the ground was valued at around $70 to $75 per ounce when they were bought out. So he's worked for the junior mining company and the major. He's done it all. He's the right man for the job. Now, some of the big catalysts for US Gold Mining Inc. No one has drilled their property since 2011, and they're just starting a drill program now. So this could be huge. They're also looking to potentially expand their land position. So yet another catalyst there. But one of the most exciting things about them is that 81% of their shares are owned by the parent company that spun them off, and they don't want to sell these shares until they can sell the whole company, right? So this is an extremely tight share structure and exactly what you want to see in a junior miner. Also, they are traded on the NASDAQ, so this is great for ease of trading. If you want to check them out for yourself, I will put a link down below in the description. I'm really happy to see US Gold Mining Inc. doing so well since I brought them up a few weeks ago. But of course, when I talk about these junior mining companies, this is just for informational purposes. You should always do your own research, do your own due diligence before making any investments. And of course, when you're investing in gold, the safest way to do so is just to buy the physical bullion. So I want to ask all of you, where do you see gold going from here? And are you buying gold yourself? Let me know down below in the comment section. I want to say a big thanks once again to US Gold Mining Inc. for partnering with me to help make this video possible. And I want to say a big thank you to all of you so much for watching. And I will see you all in my next one. Silver Dragons out.